This video is a deep dive into the Orlando housing market. Is the Orlando housing market crashing? Is it tanking? We're going to find out because the data does not lie. Now, the real estate numbers that are out there are lagging indicators. So the most recent data that I have was published in December, but I'm going to share that with you so that you've got a rough idea as to what's happening as of December, but keeping in mind that we are now at the end of January, trending into February, and the trends here are really not your friend if you're thinking about selling. If you're thinking about buying, then they certainly are, because we're starting to see patterns that develop that are confirmed in every market that I search, in every market that I work in, and every market that I cover. And so I want you to know what they are so that you have the best information to go out there and get what you want, whether you're buying or selling. Now, please bear in mind that I do not cover Central Florida. I am not boots on the ground out there. I service South Florida, Palm Beach County, Broward County, and anything outside of that region, I work with partners. So if you need a trusted advisor, someone out there who is an assassin, who can get you exactly what you want, irrespective of market conditions, someone that we know, like, and trust, that is an expert at negotiating so that you get what you want, then please reach out and I will hook you up with them right away. And the link to that is right here if you need a referral. So go ahead, click that link if you can. If not, leave a comment, shoot me an email, give me a phone call, whatever. I will be happy to put you in touch with the best of the best, no matter where you're at. And we can serve and support you no matter where you're at in the country. All right, now let's get right into the data, because this is where the rubber meets the road. So we're talking about Orlando. And all right, here we go. And specifically in Orlando, because I want to break this down in a way. Oop, that is the wrong screen. Where are we at? Okay, here we go. So monthly market detail for December 2022. This is single family home data. I think this is the most important data. If you are interested in condos or townhomes, I can provide that information for you. I'm not doing a deep dive on that now because we will be here all day. And today I intend to shoot almost every region that everyone has asked for in the comment section. So we're going to cover the state of Florida. If there's an area that you are interested in learning about, keep your eyes peeled, subscribe to the channel. That content is coming out very soon, very likely within the next 24 to 48 hours, but it will be there so that you know, and we can serve and support you at the highest level. All right, so this is the Orlando Metro Statistical Area. That is what MSA stands for, and it covers Orlando, Kissimmee, Sanford, specifically Lake, Orange, Seminole, and Osceola counties. And as you can see by this blue section of the map, that is the region that we're talking about. That is Central Florida. And what do the numbers say? Well, closed sales are down almost 35% relative to December of last year. Paid in cash is down 42%, right? Median sales price. And this is the thing that I think is very important to keep in mind, because most of the markets that I'm talking about, they are not appreciating at the macro metro level. They're actually going down. So I've been accused of clickbait and all this other nonsense out there. I'm just telling you the truth. These are what the trends have confirmed. This is real data. This is not up for debate. It is what it is. Now, what I can guarantee is that all of these numbers are going to change, and everything that we're looking at is old. It's a lagging number. So what's happening right now is going to be very different. And when those numbers are reported in February, they're still going to be 30 days late because they're talking about January. Now, in my micro market, in the areas that I serve, I can get a little bit more real time. Well, actually, I can get very real time, and I can get very granular in every market that we serve. In other markets, I don't necessarily have that same granularity, but I can absolutely connect you with someone who does. So let's just stick with this region for now, and then bang this out so that you know exactly what's going on and there is no spin. But median sales price is up almost 7%, 415,000. Average sales price is up 7.5%, almost 500, or actually let's call it 498. I don't want to round up too much. but 498,000, up 7.5%. That is not a crash. And Orlando, Kissimmee, Sanford, these areas are typically more affordable than most of the communities that are in my hyper-local market. There is a massive demand in Central Florida, and there is a massive tourism industry that exists there. If you've been watching my content for a while, then you know that I'm in Orlando all the time. My kids love going to Disney. We are Disney pass holders, or I forget what the most recent incarnation of them uh, uh, taking money from my pocket, but the Genie Pass, this, that, and the other. We have every membership that there is to have within Disney, and we're there all the time. Now, I will take a little break here. No, I don't like the woke politics or ideology of a lot of the things that Disney does. But separate to that, I don't care. My kids are young. They love going to Disney. They love going to Orlando. They love going to all of those things. And we love that experience. So I can put that to the side for a second and also say there's lots of people from around the country and around the world that love that too. So there is tremendous demand. There is a robust vacation market, Airbnb market, VRBO market that exists within these areas that is just flying off the shelves. And I know that because we have one. And I've watched the area around Story Lake where my mother-in-law has a home just get completely revitalized, or not even revitalized, developed from being just completely wide open green space to community after community after community. So there's tremendous building and construction and new developments that exist in these areas, and they tend to be relatively affordable. Now, I say relatively because all of those numbers have increased dramatically over the last few years. But let's keep on trucking. Let's get through the numbers. Time to contract has increased exponentially, up 210% at 31 days. 31 days is not a long time. That is what it used to be when we were in a more favorable market for buyers. The insanity of what has gone on over the last few years, that is dissipating. The insanity of the competitive market is not the same in most places. It can be very competitive in hyper local markets that exist within the market, but just bear in mind, this is the 5,000-foot overview. So it's taking more time to go to contract. It's taking more time to sell the home. 72 days, up 44%. New pending sales are down 33.3%. New listings are down almost 25%. Pending sales down 30%. Inventory, active listings, homes that are on the market for sale, the competition that if you're selling, you want to be in front of. If you're buying, you obviously want more homes for sale because then there's less competition, more supply, and the ability to negotiate and choose and get what you want because there are more options. But that has jumped astronomically, 6,000 active listings. That translates into 2.2 months of supply from 0.8. So what does that mean? It means that it is still a seller's market from the 5,000-foot overview, right? And those numbers in my market are a lot higher, and they're a lot higher in many markets, but I'm going to drill down into all of these markets. So if you've got questions about different areas, just know that that content's coming soon. So please subscribe. Closed sales for December down 35%, 34.8 to be exact, but closed sales have dropped radically as opposed to, or when compared to December of 2021, when there were 3,453 closings. Well, it's pretty obvious that as interest rates have gone up and affordability has gone down, that there are less sales, less closed sales. Cash sales, which is a question that everybody always asks. Are people buying cash? Are there cash buyers out there? Well, the answer is yes, but there's 42% less. So in December, there were 568 cash sales, which brings us to cash sales as a percentage of closed sales. It's down 11%, but roughly a quarter of the closings that were done in December were cash transactions, 25.2%. Let's keep on working through the monthly market detail for the Orlando, Kissimmee, Sanford area. Median sales price, as I already mentioned, up almost 7% to 415,000. Now, what I find notable and what I have been predicting is single digit growth. Can I talk? Time for some coffee. I'm starting to get a cotton mouth. All right. So December, it's up 7%, single digit. That is what I expect to see in most markets in Florida, specifically my region. I don't expect that we're going to be seeing, like you can see here, the 23s. So this, I'm just going to go right through the list, right? I mean, you can see double digit growth, 12, 13, 15, 16, 17, 22, 23, 21, almost 24, 23%. I don't expect that we're going to see those types of appreciation numbers as we move forward into 2023. I think we're going to see single digit. That could be 1%, which 1% is appreciation. It is not the insane growth that we've seen, but for now in December, in this region, in this metro area, it's up 7%, which is not a crash. But let's see what January brings when they report the numbers in February. Now, full disclosure, the economic conditions, the things that are happening, the recession, the quote unquote soft landing, which I think is complete nonsense. All of that's yet to be determined. But what I see are trends, what I see are patterns. And for right now, it still appears, and from everything that I can see, and again, Orlando's an area that I visit often, I still believe there is going to be appreciation in this region. But again, so if you're looking for a massive price correction in the next 30, 60, 90 days, I think it's very unlikely to happen. But 18, 24 months down the road, yet to be determined. I suspect it's going to be a very different market, but I will continue to share exactly what's happening so that you can go out there and make the best decisions for yourself. Average sales price, 7.5% appreciation year over year. And again, the same pattern, the same story holds true. Again, single digit growth, not the 25% that you saw in December of last year, but still going in the right direction. If you're banking on appreciation. If you're looking for that crash, it has not happened yet. Now, that being said, there's a big distinction between overpriced listings getting their teeth kicked in because they're not reality based and appreciation. So yes, there are plenty of homes that are on the market that are for sale that are overpriced, that when they sell are going to be wide gaps between where they listed and where they sold. But there are still a lot of people out there, a lot of homeowners out there that think they're playing the lottery. Well, those days are over. Your home is worth what a buyer will pay. So it is critical that you price the home the right way, given the market conditions, knowing where you're at, getting hyper local, and all those things. So if you need help with that, we can absolutely help. Okay, dollar volume, not going to spend a whole lot of time with this because obviously this is going to be the sum of the number that we just described, which December it was down 30%. We know that there are less sales. We know that demand is not the same. We know there are less closings, but at 1.1 billion, which is still a pretty big number in December. But December of 2021, as you can see, it was 1.6 billion. Median percent of original list price, 96.1%, down almost 4%. All that tells me is there are deals being negotiated and homes that are being overpriced, which you can interpret however you want. But what you'll notice is back in the frenzy, it was 100% or more from July through December. So lots of 100% months. And you can expect that that's not going to be the case moving forward, no matter what market you're in. Okay, so let's keep on trucking. Time to contract has increased, and I've been talking about that in every market. Homes do not go under contract as fast as they once did. So the days of you putting your house on the market and having 30 contracts within 24 hours is probably very unlikely, given the temperature of the market right now. Now, I can also tell you there are anomalies, there are outliers. I shared in a video, at least I think I did. We're working with a client right now, relocating from California, and they found a quick delivery home in one of the new GL communities that went on the MLS. And I've seen some builders try to position quick delivery homes as spec homes that they intentionally built for that purpose. Um, that's not the case in this situation. This was a situation where I suspect that the buyer who went under contract to take delivery of that home, the deal fell through. And so this builder wants to get that inventory off their books and they want to sell it quickly. They put it in the MLS, they priced it the right way. And when we went to see the property, it was the first day, I believe it was the first day on the market. They wanted to think about it overnight. By the next morning, the property had gone under contract and was sold. So you need to be aware of exactly what the temperature of the market is in your hyperlocal market that you're shopping, but you can expect in most instances, it's going to take longer. So for December, it took 31 days, which was up 210% in the Orlando metro area. Time to sale, also longer, 72 days. And again, these trends are going to continue to worsen, I suspect, as we continue to get more inventory, as we continue to have a rough economic condition, and as things start to develop into 2023. But time will tell. I don't know. I will keep you abreast of everything that's going on to the best of my ability. Pending sales down 33%, 1,827 pending sales in December. New listings down 24%, 2,046 in December. There were 2,718 in December of 2021. Looks like the high water mark was June, where there were 4,807 new listings. And again, seasonality could be at play with new listings. Some folks don't want to list their home in the December month. That makes sense. But Orlando and that metro region is I don't know. It's hard to gauge really how much seasonality impacted that, but that will be revealed as we go into January or excuse me, we're already almost done with January, but as those numbers are reported in February. All right, active listings up 127%, meaning the number of properties, listings active at the end of the month. This is the competition. This number is growing by 127.8%. So if you're shopping for a home in this region, you got a lot more opportunity to go out there, find your dream home, and negotiate a better deal. All right, months supply, 2.2 months of supply, up 175%. Well, 2.2 months is a seller's market. But as you can see, the trend is continuing to be more favorable for buyers, and I suspect that will continue to be the trend, and that pattern will continue to be confirmed. And time will tell. I don't know, but chances are that you're going to have a lot more options if you're shopping for a home in this metro area. Closed sales by price. Okay, this is going to break down and show you exactly how many sales happened in each price range. And I'm not going to read them all. I'll read the top three. So 400 to just under 600, there were 772, 600 to just under a million, 352, and a million or more, 107. So closings are happening every day, and it is always a good market for someone. So no matter what happens, there will always be a buyer or a seller, period. No matter what. I don't care what the economic conditions are. It's always a good market for someone. And we just have to, as a boots on the ground operator, I know that. So there is no such thing as a bad real estate market from my perspective. It's whom is it good for? And hopefully this information is helpful because I want you to benefit from the information. So if you're looking to buy, this is really important information. And if you're thinking about selling, again, critical to know. Time to contract by sales price. I'm not going to read this. I don't want it to be a 4-hour video. And I got lots of content to shoot because I want you to know exactly what's going on. All right, new listings by initial listing price. Again, breaking it down into brackets, breaking it down into price points. And as you can see, these are the numbers. All right, inventory by current listing price. Well, big jumps, and we know that, right? There's a lot more inventory on the market. This is just a more granular view of what we already know. And I'm not going to read all this because we'll be here all day. However, this last slide I think is very important to understand, and I've talked about it in other videos, but there's a lot of people out there talking about, a lot of content creators talking about the foreclosure market and the short sale market and the distressed inventory that is going to flood the market. Well, that certainly has not happened yet. In my last videos, I gave a Florida state or a state of Florida overview, and you could see how small the numbers are in those foreclosure or distress sale segment. There are almost none. And this really kind of just confirms that. So there were 14 foreclosure sales in December. There were 2 short sales in December. And relative to the traditional market, there were 2,234 traditional closings. So there is almost no distressed inventory that's for sale on the market as of December. Now, full disclosure, as the economy worsens, as the consumer feels more pain, there will be a big increase in both of these sectors. There's going to be more foreclosures. There's going to be more short sales. It has to happen. But the cycle of a foreclosure, it takes forever. So if someone stops paying their mortgage today, it could take them 18 to 24 months before they actually get foreclosed on. And there's all kinds of games they can play to even extend it longer than that. So it's going to take time for the pain of recession to be sufficient enough to create a serious uptick in either of these 2 segments, especially with the fact there is so much homeowner equity in the homes. So most likely what will happen is somebody who's in distress or somebody who sees the writing on the wall, they're just going to sell their home, tap out the equity, and move on to the next thing. But I don't know what the future holds. Who knows what black swan event might happen? I don't know. Neither does anybody else. But this is what it is for right now, and that's really it.